Hey everyone, welcome. Going over the announcements for today. Today we're going to be discussing this thing called a master schedule. I handed you, so everybody got a worksheet. That's what we're going to be filling out today. There's going to be some slides, and I've got the slides online. I didn't print them out for today, but most of the notes you'll need to take, you can just take the notes on your worksheet. Okay. And do know there is a new assignment about this master schedule. I'm teaching you everything you know how to do it today. I'll go over it a little bit at the end. It's one of these assignments where everybody has a different problem. You have to look on a spreadsheet to see what your numbers are, and you complete it on a worksheet, then you upload it. This is not due till February 22nd at midnight, but of course we've got a number of assignments coming up due in a couple weeks, so you don't want to wait till last minute. We have remember, my online students, you need to be doing those quizzes 1 and 2. There's a sales forecasting model. That's not due till February 22nd, but you want to get working on it. By the way, the tutorial video on that is not supposed to have sound. The quiz on the supply chain mapping article is due on February 15th at midnight. And if you do miss a class, so we had one student today who's missing class, you can just go to modules, and there's a module about what to do with makeup assignments, and you can go there and that tells you what to do. Okay. Any questions? The material we're covering is part of it is in this Chapter 9, Forecasting Supply Chain Management. By the way, once we start doing inventory management, which I think we may actually begin on Wednesday, you might want to print this out and bring it with you because there's a lot of really handy figures in here that I'll be referring to, and it's easier to see if you print it out and bring it with you. But the stuff today, a lot of the material that we're doing today, it is covered in here. We have some slides as well that I'm going over. We're doing a lot of practice problems. There's one thing in our practice problems today and in the slides that isn't in here. This thing called available to promise. Yeah?
Are you talking about the Chapter 9 forecasting for supply chain?
Yes.
Okay.
Yeah, the one that says Chapter 9 forecasting for supply chain management. All right. It's just called that Chapter 9 because it's a chapter in a textbook I'm writing. So here's the setup for this. Remember we said last time that one of the most important things you do in supply chain management is this SIOP meetings. Sales, inventory, and operations planning. And we said one of the main things there is you have these certain people who are trying to figure out good forecasts for what sales will be. They're trying to figure out in the future, how much will we sell next month, how much of each product will we sell in 2 months, how much of each product will we sell in 3 months. And we're doing that because we want to make sure that we produce enough to meet those sales. And another thing we talked about, by the way, I said, okay, if I wear a mask, does it matter if you can't see my lips? Okay. It's just that thing's so blurry. Another thing is once you've got those forecasts and you've made your production decisions, and today is all about just production decisions, then once time unravels and you get into the next month and you see whether sales are higher than you thought it'd be or lower than you thought it would be, we talked about how you have to have these SIOP meetings where the sales people get with the production people, get with the materials resource people, and you have to see, okay, what were we wrong about and how do we need to change our production schedule in light of what we're seeing. And of course, you can imagine, certainly when COVID came, they were having SIOP meetings every single day, just trying to figure out what to do. And that's what your supply mapping reading article is mostly about. And so you're trying to reconcile these forecasts and production decisions. And you know how in accounting there's standardized ways of doing accounting. There's standardized tables you use, standardized words. Well, it's the same thing in supply chain management. What we're going to be learning about today is something called a master schedule. And it's a way where we put forecasts and our production decisions together on the same table so everyone in the business can see what our strategy is. And so then when we have our SIOP meeting, that's the table what we're trying to figure out what we should change. And this is what we're doing today is just about how to organize our decisions. We're not actually making decisions yet. Shortly we'll be talking about how to make production decisions. But today we're just saying, given what these forecasts are and given what our production decisions are, how do we report this in a way that everybody else is on the same page? So it's really just memorization of what certain words mean and how we calculate on the table. The nice thing is, except for one piece, it's all, I think, pretty obvious and really pretty easy to do. All right, so master production schedule. This is a big, long definition that I will never expect you to memorize. And all tests or anything and stuff are open notes and stuff. So maybe you'll have to recognize this definition and be able to say that this is the master production schedule, but you won't have to memorize it. But again, like all these supply chain management definitions, it's really wordy and it doesn't make much sense to you right now, but it says a line on the master schedule grid. Well, what does that mean? I'm going to kind of be flipping back and forth between some slides to show you something. This is a master schedule grid. So let me show you what it kind of looks like, and then the definition will make much more sense to you. Here, we have a line for what forecasts are. We're producing this natural chewing gum. We say we're going to sell 200 units in March, 300 units in April. Down here, this is where we put forecast again. We'll talk about that in a minute. Down here in the master production schedule, this is saying how much we're going to produce each month. So here we're saying we're going to produce 210 units in March, 310 units in April. And what we have to do each month, we have to take into account what is the beginning inventory of every month and how much inventory we're going to have at the end of the month. And then there's also this thing available to promise that I'm going to get at in a minute. So this thing, it's just a table saying how much we plan to sell, how much we plan to produce, and from that we know what our inventories are going to be each month. So now when you look back, a line on the master schedule grid. So you've seen the master schedule grid, that makes sense. Reflects the anticipated build schedule, how much stuff we're going to produce for those items assigned to the master scheduler. So sometimes there's a person called a master scheduler, and all they're doing is just trying to keep that table straight and make sure everybody agrees on it and everybody understands it. So this is again one of those things where it's just, you got this master schedule just to figure out what the hell's going on in this company and make sure everybody's on the same page. Represents what the company plans to produce, expressed in specific configurations. It usually means like what month, which gum we're going to produce. And in this class, the master production schedule, we're only going to have one good at a time. So there's just one good there. MPS is not a sales item forecast that represents a statement of demand, although the forecasts are on there. Must take into account the forecast, the production plan, and other important considerations such as backlog, availability of material, availability of capacity, and management policies and goals. The master schedule I'm going to use is really simple. It's not going to have availability of capacity, management plans, but those things are kind of built into the decisions in it. We're going to start really easy. So the master production schedule is just one line. Look on that worksheet I handed out. There's one line that says master production schedule. Just a line on the master schedule grid. And so that means Surprised they didn't want me to log in. And then send a push to my phone. And so then what's the master schedule? Well, the master schedule is just the big table. It has all that other stuff, the dates, everything. Okay. Well, we're just going to learn as we go. We're given a problem here, and we're just going to answer it ourselves. Okay. And you'll want to take notes on certain things as we go. As we go through the slides, call-outs will come out saying what certain things mean. And so you'll want to write whatever notes you feel is necessary there. Okay, well, the first thing is, notice this thing down here is the real master schedule. But I've got this thing up here to kind of help you differentiate something. There comes a time when people are putting together forecasts without any concern about what the orders are, how many people have actually ordered. So way back, we're saying at the beginning of February, before anyone could order anything, the supply chain management team responsible for the forecast said that we're going to produce 200, that we think will sell 200 units in March, 300 units in April, 350 units in May. Just the best guess. Now, this is when the time when you just want your best guess. You may be thinking, well, shouldn't you over-predict a little to make sure that you have enough in case demand is more than you expect? No, we've got a thing called safety stock for that. So there's a thing called safety stock. It's going to say ignore for now. We're going to be ignored it all day long. But that's the thing we can put in there when we want to say, maybe we should make sure we have a little more in inventory, maybe a lot more, just in case demand is a lot higher than we thought. You've got beginning of February and then end of February. And remember, these concerned March, April, May, June, and July. And so by the end of February, you already may have orders coming in for these things. You said we think we'll sell 200 in March. Orders may be coming in, and we need to report those orders for reasons you'll see shortly. And so we're going to have, we've got a line here for forecasts, and we've got a line here for orders. And you have to, when they were first putting together this table, they had to say, okay, are my forecasts going to include the orders or not? You can go either way. You just have to make really clear so people know whether the forecasts include orders or not. And in our case, it's not going to. Okay. We put together our forecasts. Now this master schedule is becoming active, meaning people are starting to place orders for this stuff. Now right now there are no orders though. But there's something we do called consume the forecast. And that's, if you take one of these certification exams, I guarantee you that's going to be a term you need to know on there. That just means we started off with a forecast of 200. For every 1 unit consumer orders, we reduced that forecast by 1. Now right now there are no orders, so we put here forecasts, and I'm helping you with this because I'm saying forecasted sales above orders placed. We take a forecast minus the orders, so 200. So we put 200 there. And we always do that. We always consume the forecast. That way, if there is positive orders there, someone doesn't need to say or ask, does that forecast include the orders or not? Because if you're working with a table like this, you know it will not. So what kind of forecast do you think we might put right here for April? This is when everybody pretends like they're writing something so they don't have to answer this. Forecast for 200 here, orders are 0, so 200 minus 0 is 200. So what's going to be there? 300. Got it, Sam? I'm going to call on you at some point, okay? You can still refer to Steve, but the more you refer to Steve, the more I'm going to call on you. Don't worry, Rachel. You're off limits unless it's a yes or no question. Yeah, so the rest of this is easy. There are no orders there, so we just put the forecasts. And thus, our expected sales, our expected total sales for any month is always going to equal that forecast plus the number of orders already placed. And of course, as time goes by, orders will come in. We'll put an order there, and every time we increase the number of orders by one, we reduce what by one, Sam?
I'm sorry.
Steve? When we increase orders by one, we reduce what by one?
Sales?
Yeah, the forecast, yeah. Which is what you're saying, yeah. So if an order came in for April and we put 1 into April, we'd reduce the 300 in April to 299. And we'll do that in a minute. All right, we got some more things that we're starting here in March. And beginning on-hand inventory. So if we're selling gum, this is like when it's end of February here, and in March we say, okay, we know we already have 10 units of gum here. I always have to give you that. There's no way you can guess what kind of company inventory your company's going to start with. So I always have to give you that number there. And then, but based on this, we want to know what's our projected available balance. And that's exactly what it sounds like. How much do we project at the end of the month we will have left over in inventory? And we look here and we say, okay, well, we know we're going to produce 210 units. We already have 10 units. So how much total gum do we have? 220. Very good. 210 plus 10 is 220. Got that, Stevie Ray Vaughan? All right. And so if we know we're going to have 220, but we think we're going to sell 200, how much do we think we're going to have left over? 20. It's as simple as that. So for every line on the projected available balance, we're just going to take beginning inventory plus production, subtract orders already made, and subtract the forecast. Because once we're in this table, the forecast always means forecasts above orders placed. Another thing I'm doing with this table is introducing you to new vocabulary. So a normal person, when we talk about production, we'll just say production. Production is going to be 10. Production is going to be 100. But every time you have organizations always develop their own unique language for good reasons, their own reason. It happens that they often call these things scheduled receipts. So another way of saying we're going to produce 210 units is saying scheduled receipts for March is going to be 210. This is like saying how much new stuff. Why they call it scheduled receipts, I do not know. We're ignoring available to promise right now. Okay, so think really hard about this. If we're going to have 20 units at the end of March available in inventory, how much are we going to have at the beginning of April?
20.
Exactly. Very good. See how we did that with confidence? He didn't even wait on me to call him. You can learn something from him, Allison. Yeah, beginning on-hand inventory is always just going to equal the projected available balance from the previous month. So the beginning on-hand inventory is always easy. I have to give you the first number, and the rest is just from the projected available balance. And by the way, your assignment on this, the table looks exactly like this. I just give you, every student gets different sales numbers and different forecast numbers and different orders numbers. We're ignoring available to promise from now. Well, now we can start going through all these rows. Okay. Now we're in April. Scheduled receipts production is 310, and we started with inventory of 20. So if we start with 20 and we produce 310 more, how much total will we have? $20 units here. Yeah, 310 more, 330. So you've got 330, you're going to sell 300, so at the end of April, we're going to have how many left over? 30, yeah. See, it's really easy. So us beginning inventory in May. There you go, 30. So us ending inventory in May? 30. So what's beginning inventory in June? 30. What's ending inventory in June? 30. So what's beginning inventory in July? And so what's ending inventory in July? Okay, very simple. The problems are simple. Usually you can just look at just remember what projected available balance is, and you can fill the numbers in really easy. And they never get more complicated than that. It's just different numbers. And we're going to keep doing more of those. But I think what we're going to do next is we have this available to promise thing. And that's, yeah, okay. So here's what the available to promise is. You know how sometimes when y'all go onto Amazon and y'all are trying to buy one of my books, and you bring it up and it says only a few are left in because of the overwhelming student demand for my books? Well, how do they know about how many are left over? They're making a promise to you, right? They're saying there are 3 more left. If you buy 3, you can have the 3. That's available to promise. That's where, the people out there making sales, if someone says, can I buy 5 units of this in March? You've got to know whether you can promise them 5 units or not. And so the way this thing is set up is so that you have a number that tells people how much they can promise other people that will be there. And it's hooked in a database so that when people are having their SIOP meetings and they're changing the schedule, then the salesman who might be out in the field somewhere, they take up their smartphone and they look to see how many units they can promise, and it's updated immediately. And so again, this is information sharing. So available to promise, let me show you the weird definition first. Well, this one isn't that bad. So it's the uncommitted portion of a company's inventory and planned production. Uncommitted means you haven't already sold it to someone yet. It's the sales above orders, part of that forecast line. The ATP quantity is uncommitted inventory balance in the first period and normally calculated for each period in which an MPS receipt is scheduled. Now here's the 2 rules of thumbs. ATP is calculated the same all the time. For the most part, the first period is different though. And so it says, in the first period, the amount you can promise is your beginning inventory plus scheduled receipts minus customer orders. And the reason that is in this example, when we're starting in March, it's actually the beginning of March or right at the end of February. And that beginning inventory, we know how much is there because it's now and we're looking at it. We can see it, we can count it. So in the first period, beginning inventories matter for available to promise. But in every period after, it never matters. Because we can calculate what we think beginning on hand inventory will be 3 months from now, but we don't know what it will be. And we don't want to make a promise unless we know we can meet that promise. And then for all other periods, it's just scheduled receipts. What do scheduled receipts mean again? What's that? Yeah, production. How much you're going to produce. Scheduled receipts minus consumer orders. All right, so we're We're going to do available to promise now. We're going to finish this last line. Here we go. Available to promise for March. Now this is intuitive once you get it. You're saying, okay, it's March. How much do I know that I can sell someone in March? If someone calls me right now and says, I want as many units as you can sell me, what's the maximum amount I can promise to be able to sell them? Well, I'm starting off with 10 units. I'm producing 210 units. So for all this month, I'm going to have 220. And how many? And there are no orders yet, so I've got all those units I can promise them. Nobody's bought a single unit yet, so I can promise them the 210 plus 10. And so here, available to promise is going to be production or scheduled receipts plus beginning on-hand inventory. And again, we include beginning on-hand inventory because it's now, and we know how much inventory is in there. Just like it's now, we can go count the number of books there. It's real. It's not a forecast. It's not a guess. But when it comes for each month in the future, then we ignore the beginning balance because we don't actually know how much we're going to have. And we don't want to make promises we can't meet. And so in April, we know we'll have 310 units. We don't know what beginning inventories could be. We know we're going to have 310 units. Nobody's placed a single order yet, so we can promise someone 310 units for April. This will come up later, but you might want to write it down now. There will always be a number for ATP, available to promise, as long as there's a scheduled receipt. So as long as there's a non-zero number here, there's going to be ATP here. If there's non-zero here, ATP here. And we're producing something every month, and so there's going to be an ATP for every month. There will be times when we don't produce anything in a month and we just don't list an ATP there for clarity of communication that we'll see shortly. Well, for the rest of this is pretty easy. We know how much we're producing. Nobody's made an order yet. So ATP for May is just going to be 350. For June, 300. For July, 300. So again, your assignment, what you're going to do is you're going to download a spreadsheet, and you have 2 problems to do. You'll look up your name, and you'll look up the numbers for you, like the production numbers for you, the sales numbers for you, things like that. You'll fill it in a worksheet, and then you'll have to fill in all this other stuff just like we did there. So everybody's doing the same thing. You just have to do it with your own numbers on 2 different problems, and then you upload the sheet back. Yeah?
On the available promise, or is it 310 in April just because we've used up all of our, we'll have a zero for beginning balance?
We don't know. We don't expect we're going to use it up. We just don't know if it's actually going to be there.
Okay.
We know the production's going to be there, or at least it's certain enough that we can count on it.
Okay.
But we just don't want to promise something that we think is going to be in inventory. It's kind of like just a rule of thumb they use about when you can promise something.
Okay.
So it's like they say, if they say we're going to produce it that month, then we can promise it. That's our rule of thumb, how confident we are. But if they say it's just going to be there in beginning balance, unless it's now and I can count it, I don't count it. I don't promise it. Okay. So what we're going to do now, we're just going to do more practice problems on this. So we did number 1. Let's go to number 2. So sheet 2. Looks to me like everything is exactly the same, except for one thing. What's different about this problem? What's that, Stevie Ray? Yeah, you got some orders this time. Okay. So again, what this means, you won't, in your assignment, you won't have this forecast thing up there. You'll just have numbers up here. But right now, like they told us beforehand, we're going to have 200 units. We should sell 200 units in March. But that was the forecast above any orders that came in. That was made long ago. May have even been made last year. But now, in this problem, we know that 100, someone put in an order for 100. So we want to consume that forecast. We said we were going to sell a total of 200 units. Someone's already ordered 100. And so the forecast we put there is just the original forecast minus orders, 100. We consumed the forecast in that whenever an order came in, the forecast went down. And if you're ever in doubt, just look that I put there. It says forecast sales above orders placed. Real MPSs don't have that, but we're just learning it. So that's our training wheels. All right, so think for a bit about what the forecast we're going to put here for April, May, June, and July. I'm going to call on some people. If you can't answer, you can always defer to Steve Sawatsky. All right. For forecast above orders placed for April, what number do we think we want to put there, Ethan?
300.
300. Did you get that by going 300 minus 0? Yeah. I told you math was a prerequisite for this class, and now you're seeing it, right? What we're going to do there for May, Trevor? 350. What about June, Miss Allison? 300. Okay, Sam, I'm going to give you an easy one. What do we want there for July? You got it. Steve, you can take a nap over there. You're going to be okay. All right, now going down here. Okay. You've got 10 there. I always have to give you that 10. Now we want to think about what's our projected available balance at the end of March there. Stevie Ray, you got a hunch? What's that? Did you say 120?
Yes, sir.
No, I'm thinking not 120. So what's the total amount you're going to have that you can sell? You start off with 10 and you're going to produce how many? Stevie Ray. $10 plus 210, 220, right? And somebody's ordered 100, and we think we're going to sell 100 more. So we'll have 220. We're planning on selling 200. That's going to leave us with 20. Okay, and Stevie Ray, if we have 20 at the end of March, how much are we going to have at the beginning of April? It's a lot easier than you think. If you had 20 a second ago, how much do you have now? 20. So it's all it is. This is just like there comes a time when March ended and it became April, and that was a split second. And whatever you had left over from March now is what you begin April with. Okay, now knowing that projected available balance is always going to be beginning on hand plus production minus orders minus forecasts. Calculate those numbers, and I'll come back to you in a second to call on you. So again, how much we have think we'll have at the end of the month depends on how much we start with, beginning on hand, plus how much we produce, minus how much we've already sold, that's orders, minus the others we think will sell, the forecast. Courtney, you got any ideas for projected available balance at the end of April?
30.
Yep, 30. You start off with 20, you produce 310, so you'll have a total of 330, and you plan to sell 30. Nobody's placed an order yet, but you think people will buy, 300. You think people buy 300 units, so you think at the end you'll have 30 units. And so in May, we're going to begin with how many units, Brant?
30.
What's that? Yep, 30. So we start off with 30. We're producing 350. We think we'll sell 350. So Justin, how much will we have at the end? 30. And you've probably seen it's 30 the rest of the way because your production matches the amount you think you'll sell perfectly. Now we're doing available to promise again, and we're thinking, how much can I promise people I can sell in March? It's the first period. Do we count the beginning inventories here? Yes, because now we know it's there. And so we say, we'll go starting off with 10. We're going to produce 210, so we'll have 220 units. How many has already been promised to someone? 100. So we have these 220 units, 100's already been promised to someone, so how much is left over we can promise? 120. For April, May, June, and July, are we going to take into account beginning inventories? Rachel? For April, May, June, and July, are we going to count for ATP? Are we going to count beginning inventories? Say no. No, we're not. We only count them, do we count them the first period? Because we just count it, right? But we don't count them in the other periods. Why don't we count it? What's that? Yeah, we don't actually really know what's going to be there. And so what we're doing here, For April, how much y'all think we can promise people for April that they can buy?
310.
Yeah. One of the two guys in the corner over there. What do you think ATP is going to be for May? 350. You got it. So you're getting it. 350, then I think you see 300. 300. Just a couple rules to learn, and it's all pretty easy. Let's go to page 3. All right, this is a little different. Looks like sales are the same, 200, 300, 350, 300, 300. Currently, there are no orders. We're going to produce 14,050 units the first month and nothing the remaining months. So this is like us saying that I'm just going to go ahead and produce in March everything I'm going to need till July. And again, I have to start you off with 10 units. All right, like before, think for a second about what we're going to put on line 7. There are forecast units per month, forecasted sales above orders for each of those months. Lance, any idea what we're going to put for March forecast there? 200, that's right. Because there are no orders. What about April, Lance? 300, all right. Then 350, 300, 300. Okay. Now, master production schedule is a little different, producing a buttload in a metric buttload in 1450, and we're starting the month with 10 units. Okay. So we start the month with 10 units. We're producing 1,450, and we expect to sell a total of 200 units. What two numbers am I going to add together?
The 1,450 plus 10.
Yep. So I start off with 10, and I'm adding 1,450. Gavin, what do I need to subtract from that number?
The forecast.
Yeah. The forecast of what?
Month, so it would be March, which would be 200.
Yeah. If there were any orders there, would we subtract that too?
Yes.
We certainly would. So we think at the end of March we're going to have 1,260 units. Go ahead and see if you can fill in the rest of the beginning on-hand balance and projected available balance for March, April, May, June, and July. And of course, when I say do something on your own, I'll call to you. If you need help, just raise your hand and I'll come help you. And remember, it's very useful to write yourself little notes about how you're calculating some of this stuff so you can refer to it when you do the assignments. Is anybody a little confused and want my help? Want to ask a question they're too embarrassed to ask? And see if you're getting the same numbers I got there. Is that hard for y'all to see? Can you see the numbers? Yeah, I can't really well. Did you get those numbers, Sam? All right. Okay, so now we got to go do available to promise. We're going to do it for March. We've got a number there for March, and you'll always have a production number for March on assignments. So if there's a positive number here, we're going to have an ATP for there. First month, do we count beginning inventories? Yes, good. I like that. And we're producing 1450. And so we've got all those together, 1450 plus 10. So we're starting off with 1,460 units. How many of that 1,460 units have we sold? None. So how much can we promise people? All of it. So our available to promise there is just 1,460. And here's the new thing. In this table, that's the only time we're going to have an available to promise. Because we're only going to have a number under there if there's a positive number for production. And the rest of the months, we're not producing anything, so we don't have available to promise there. Even though, and so this is just a way of communicating, why would I not want to do this? So don't do this on your paper. Why would I not want to put 460 there? How could that be confusing? Yeah.
What does it mean?
Yeah.
Because it can be confused that no one bought any inventory in March, or that you produced the same amount in April.
Yeah. It's kind of like you don't know if this is meaning available to promises 1,460 from here for the rest of the month, or if I should add those together. You don't know if it's double counting or not. So there's a rule you use to make so people don't wrongly think that you're double counting, that you only do available to production on the months for which there is a scheduled receipt, a production. So in a minute we'll do another problem where maybe there's a scheduled receipt here, and so then we will have an ATP there. Page 4. Go ahead and start working on that on your own. Let me know if you need help. I think this is going to be exactly the same except we have customer orders in March. Okay, well, let's just kind of do that again. So this is exactly the same. Let's ignore available to promise for now. It's exactly the same, except now we actually have 100 units for as an order in March. So we're going to change the spreadsheet. So I need to come down here and put a 100 there for my orders. And what do I need to do next? Orders went up by 100. Yeah, we got to consume the forecast. So now forecasts have to go down by 100. And so it now equals 100. And then if I did formulas right, everything should stay the same. Did y'all end up with 10 units at the end last time? At the projected available balance at the end of July? Okay. All right, but now let's see if ATP changed. Okay, for what months are we going to have an ATP number available to promise? March. And how did you know that? What's that? Yeah, you will always have, and the reason we don't have it for the other months is because there's no production for the other months. Yeah, right. So whenever there's production, we're going to need a number here. Now we need to think about, okay, how much can we promise people? Okay, we're starting off with 10 units. And we know we count that. We're going to produce 1,450 units. We know we count that. It's going to be 1,460 units. How much of that 1,460 units can I promise someone I can sell them? All of it? Minus 100, because someone's already claimed 100 units. So we're going to have 1,460 units, but someone's already claimed 100 units. So we only have 1,360 left. And we don't put ATP under any of the other months because there's no production there. So if you compare what happened when we went from sheet 3 to sheet 4, all that changed was that someone placed an order for 100 units. And when that order went in reality, people aren't doing this by hand. An order comes in electronically, whether it's a cashier or an internet sale, and all this stuff is going to get updated automatically. But we're learning how to do it by hand because we want to learn what these things actually mean. And when that happens, when a salesperson looks up on the smartphone out in the field trying to see how much they can promise someone, that number will change to reflect that. Sheet 5. Okay, I'm going to go ahead and start filling out your sheet too. So notice here there's no now I've already accounting for, I don't have that line above that shows forecasts before we knew what orders were. That's what your assignment's going to look like. So I'm going to just get rid of this. I'll do this one kind of fast with it, make sure we get out on time, but make sure you get the right numbers too. So I'll just talk through it. So what I'm doing here, my projected available balance, I'm saying, okay, I'm starting off with 20 units. I'm producing 1,019 units. I've already sold 73 units, and I expect to sell 234 more units. So I expect to end the month with 732 units. So I expect to begin the next month with that same number of units, 732. And if I did the formulas correctly and carried them out, that's what I should end up with. Anybody get anything different? Okay. For which 2 months will I have a positive number, a number for available to promise? March and June, yep, because we're producing something there. Right? So available promise, the number I'm going to have for March is, I'm starting off with 20 units, and I'm going to count those because they're there. It's now I can see them. Plus, I expect to produce 1,019 units. I've already promised 73 units to someone. So that gives me 966 units that I can promise to other people. I'm not putting anything there because there's no production there, and I don't want things to accidentally be double counted. And now I'm at June. It's not the current month. It's not the first month, so we don't include the beginning inventory. Now all I need to do is I say, okay, we're going to produce 1,314 units. We haven't sold any of those. There's no sales for it for June or July, so I can promise all of those 1,314 units. And I'm done. And let's see. Page 6, we just have some different numbers, so I'll just plug in the different numbers here. We can see what we get. So different sales numbers. And if the numbers and formulas are correct, let's see, this first one here, we're going to count 20 plus that. I think that should be right. Anybody see any problems or anything? Okay, good. Let me show you one other thing, then I'll put this back up there if I need to. But just show you the thing about the assignment. So assignment here, so lecture set B, here's the assignment, it's worth a total of 400 points, and you're submitting numbers, so you want to make sure you do them right. But here it says assignment numbers for each student. You download it. Oh, and I have to fix something. I'll have to fix that when I get back. It's missing your name. And here's the blank assignment. So you see, here's the assignment, but the tables are blank. What you're going to have to do is come here. Oh, there it is. So Matt Abbott, what he's going to do for his first problem, that means this first table here, he's going to get his numbers from here. So his first forecast for above orders is 104, so he's going to put in 104 here. And he'll fill in the rest of the numbers, but of course these are blank. Those are the numbers he has to give me. He's going to fill out the table. He's going to go to the second problem. Those numbers come from here. See where it says second problem. He's going to put them there, and then he's going to upload that document here by midnight on February 2nd. Okay, that's all for today. I'll put that other answer up here if someone wasn't able to get it all.
I have a question.
Yeah.
I was doing the homework, but I'm getting a negative number right here, and I don't think that can be right.
But there could be a code error that I hadn't generated. The randoms, numbers I generated random, so
Okay.
let me see.
Because I just used formulas for everything, so I think my math is ready.
Wait a minute. Okay. Yeah, do tell you, email me and remind me about that.
Okay.
And I'll put some better numbers up for you. Okay. Yeah, if you are like one student here, she was doing it, she was getting a negative number for beginning on hand. I generate these numbers randomly. I tried to make them make sense, but I may have made a mistake. So if something looks wrong, just email me and let me know.
Also, I think for your face shield, there's like a film over it, so that makes it
Really?
blurry, yeah.
Oh, thank you very much.
I'm the one that missed last week, and here's my doctor's note.
Okay.
I didn't know if I didn't hear my name being called on the roll today. I may have been just not hearing it very well.
Yeah, I don't. When did you add the course late?
I added it last week, but my name's like on the list in the canvas and everything like that, but I didn't hear it called today.
Okay, yeah, I just need to update my list, I think. Yeah, you're in there.
Okay.
I just need to put you on the list.
You said it come with you. Do I need to do any assignments or anything from last week, or?
Yeah, do the. Down here.
Okay. And just submit it through Canvas and everything?
Yeah, you upload it there.
Okay.
You just outline 10 minutes of a video is all it is.
Awesome. Thank you so much.
Dr. Nord, I just wanted to make sure that this was a good looking chart. I know that it doesn't have every day on it, or did you want me to?
It doesn't have to have every day, no.
Okay,
As
perfect.
long as it's really easy to.
try to do blue and black dotted. Black solid, blue dotted to kind of distinguish.
Yeah, for some of them, they're really close together
Yeah.
because you didn't have a trend. That's why, right?
Yeah.
Yeah. No, I think that's good.
Okay, perfect.
Mm-hmm.
How's it going?
All right.
You just didn't call my name at the beginning of class.
What's your name?
Sage Warner. I'm on Canvas. I just didn't know if you had me in because I registered late.
Yeah. I think I need to add you too, and like that other person. I'll add you.
Awesome. I appreciate it.
Thank you. Mm-hmm.
Hi, Dr. Norwood. Yeah, I wasn't in class on the 21st, and I saw in the lecture that you did a couple of handouts. Would I be able to steal a copy off those?
They're online.
Oh, they're online?
Yeah.
Okay.
Yeah.
Just from the handout, I know one was from, one's for like a reading for a quiz and all those.
Yeah, they're all online.
Okay.
Yeah.
All right.
If you're looking for something that doesn't seem like it's on there, let me know, but it should be.
Okay, thank you.
Mm-hmm.